So news came out here today, Google has eliminated 35% of managers overseeing small teams in the past year. Whoa, it's not a small number. Like 35% of managers overseeing small teams? Okay, that's interesting, right? Now, a lot of people think Silicon Valley and all these companies are spending so aggressively on AI because they're going to be able to make a ton of money from that, and that's the only reason they're doing it. Silicon Valley, these big tech companies, Google, Meta, all these companies, right? Adobe, blah, 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 go through them. Yeah, they got Microsoft, OpenAI, they all got a phenomenal revenue opportunity. Phenomenal revenue opportunity to build revenue. But that's not the only point on why these companies are so bullish on AI, why they're spending so much. The hidden thing has always been they're going to be able to reduce the cost of doing business immensely. And they're going to put themselves in a position to have margins higher than they've ever had them in their company's histories. And they're going to build their businesses from being what we already thought was a top in profitability for companies to new levels that were like just in shock. Like, don't be surprised if some of these companies head to net margins of 40% plus, which in the past people could never go there mentally. Like a company having net margins of 40% plus, that's not possible. People thought like, oh man, you can maybe have 5%, 10%. If you're really great, maybe 15 or 20%. Now we're talking about net margins of some companies going to be pushing 40% plus. That's where we're headed here, folks, okay? Now, the cost-cutting measures are something that's going to be significant. And here's the thing, okay? If you look at like what companies pay a lot of money, guess what comes up? Silicon Valley companies, okay? It's not Walmart. It's not Chevron, Exxon. It's the big Silicon Valley type companies. Google, Microsoft, Netflix, right? Palo Alto, Salesforce, Adobe, go through the whole list of them. Those engineers that work at these companies, very expensive. And you got to understand they have to pay a big salary. On top of that, they usually have to give them a bunch of stock, which then dilutes shareholder value. And then these companies have to then do big share buybacks. So it's not uncommon for, not even a high-ranking employee at these companies to make $300,000 or $400,000. $300,000 or $400,000 at most other companies would be like, senior vice president type money, or maybe even executive level type money. Not at these companies. Like you could be the 6,900th most important employee at Google, and you probably make many hundreds of thousands of dollars a year in total comp between everything. So that's just something to keep in mind here. And that's the hidden reason these companies are spending so aggressively on AI, because they're going to be able to produce margins on the bottom line like we've never seen before, and be able to run more profitably than anything we've ever could even imagine. Okay. Next up here, AMD. Where's AMD headed? What's going on with AMD given this Nvidia news? Okay. So here's the thing you got to understand, and the difference between, there's a lot of difference between AMD and Nvidia, but the main point is AMD is at the beginning of their big cycle. Nvidia is at the middle stage of their cycle, okay? Those are very different areas. Now, this cycle for AMD is going to conclude likely in 2028 or 2029 with the big, huge growth rates and all sorts of things, okay? Whereas Nvidia is gonna have a really tough time in 27, 28. So they're just at different stages, and you got to understand AMD is at the beginning stage. So regardless of what happens with Nvidia revenue growth, AMD revenue growth is going to be accelerating, not decelerating. You're going to see over the next several quarters acceleration. And what you're going to watch is a flip happen. This flip is essentially what's going to happen is, and this is going to happen within the next, I would say this will happen within the next 2 to 3 quarters. I'm not talking in the next 2 to 3 years. The next 2 to 3 quarters, what you're going to see is AMD's revenue growth percent is going to start outpacing Nvidia's. Now, Nvidia is going to keep growing much larger as a overall total number, but as a percent of revenue growth, AMD is going to flip Nvidia essentially, and you'll start seeing AMD, in my opinion, I could be wrong, but I think I'll be right. What you're going to see is AMD's revenue growth start to outstrip Nvidia, which is going to be a big moment, because that's going to be the moment that everybody's going to realize on Wall Street, AMD's here and they're for real. And so that's going to be, that's something I see coming. Wall Street doesn't see it coming yet, and I think it happens in the next 2 to 3 quarters. My only question is, does it happen in 1 quarter, 2 quarters, or 3 quarters? That's my only question. But it's coming, baby. Oh, it's coming. And so, I think some people are realizing, like, whatever happens with Nvidia and their growth rates, it doesn't really matter that much to AMD. Like, I looked at AMD after hours, it's down 1%. Put me to sleep. Like, nothing. And so I think, and that 1% move, by the way, is really only because of the algorithms. If Nvidia pulls the semiconductor index down like that, several percent, it's hard for AMD on that particular day if AMD has no news to go up, right? And so that's kind of what's going on here. The bottom line with AMD is we're headed to 200 next. 200. Then we're headed to 300 in 2026, in my opinion, 300 plus. And if all goes well, we could be 400 plus in 2027. And then 2027, we'll start to have conversations around AMD of, like I'm having with Nvidia right now in 2025. We'll start having those sorts of conversations in 2027 for AMD about like their mid stage, they're about to enter their late stage for the chip cycle, growth rates are going to slow substantially. We'll have all those conversations at that particular time. But that's not today. That's in 2027, we'll be having those conversations. So that's where the stock's likely headed. Now, I also looked at the options market because I said, this is what I see happening for the stock price. But I'm like, am I crazy? Maybe I'm crazy. So I said, what does the option market think here? Okay, now this is really fascinating because AMD right now is in the 160s. Okay, so I said, let me look at January 2027 call options. How expensive are, let's say, $300 strikes going for, right? Which is, a little less than a double up from here. If you want to buy a $300 strike that expires January 2027, you got to pay $10 for that. That's like almost double the stock price right now. And that's just between now. You need that to happen by January 2027. That's not that long in the future. That's what? Less than a year and a half from now? That's insane. So what something like that tells me is whoever's selling the call options is very scared the AMD is going to go up significantly. So they want big premium. Because usually, like that far out of the money, like somebody might want $1 or $2 because it's so unrealistic that the stock's going there, right? So they might be like, throw me $1, throw me $2. The fact that sellers want $10, that makes me say, I think a lot of people are scared that AMD is going to go up significantly over the next 1 to 2 years here, right? And then I even looked at like, what about like, do a lot of people think the stock's going to go to 200 plus this year? Because I think 200 plus is very in reach this year, right? Even after this massive move it's had. And so I looked at December 19th, 2025 expiration call options. And here's what I found. If you want a 200 strike, you got to pay $7. That means to break even on the buy, you need the stock to go to $207. You need $40 of upside between now and December 19th. It's not that long in the future. And you need the stock to climb $40. And that's to break even. We're not even talking a profit. We're not even talking a profit, which shows me a lot of people are also scared AMD is going to still go up significantly more this year. So I think that's just, sometimes the option market can give you some clues to, how people are actually thinking out there, because people are bidding there. They got to be pretty confident. Like the stock's still going to go up significantly, not only this year, but over the next few years. So we'll see what happens. Okay. Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in? Or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. All right, Tom Lee.
It's good to see you.
Great to see you, Scott.
Nvidia looms large. Does that make or break whether your bullishness comes to fruition moving forward?
I know investors are really anxious, and Nvidia has not performed well the last few times it's reported. But the story arc there remains that that is one of the most important companies in the world in the middle of the biggest structural change in the world economy. So I think NVIDIA still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
You feel like there's become a little more AI anxiety, as we wrote at the top? You know, from Sam Altman at OpenAI saying that, you know, investors are a little overeager about AI. You know, Meta's reorganized again. They've stopped their hiring. There was another report today that suggested some of these Gen AI models are failing. You think there's anxiety in this market about this trade?
Well, I think everyone's trying to get situational awareness. Like, is this inning 1 or 2 or late innings? Because we know there's been a lot of value creation and a lot of capital that's flowed in. And we know that Silicon Valley has seen a boom of companies with $100 million annual run rates, like in record time around AI. And a lot of people want to ring the bell at the top. But to me, it still feels really early because there's such a limited number of stocks that public investors can buy that represent a direct play on AI.
I know, but that could lead to bubble-like activity, right? When your pool of investable opportunities remains so small, all of this money rushes to a select few, and then they have to live up to all of that hype and give a great return on these hundreds of billions of dollars that are being invested. That's not a risk?
Well, it is a risk. I guess that's really the next stage of what we have to see is how does the market accept now adding to the roster of direct AI plays, you know, beyond just Figment. And I think, you know, if we look at the next 12 months, there'll be a bevy of IPOs, some really big companies that are later stage. But if they're bought and they produce good growth and their stocks perform well, I would still say that still means we're early innings.
It's still your favorite trade?
I think it's the most important trade, yeah.
I know it's the most important. I feel like that's legit. But is it?
I think there's bigger upside in the owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JP Morgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think
this is just ridiculous. Okay, listen. Some of these Wall Streeters believe like if Nvidia stock stops going up, like the whole market's doomed. It's just ridiculous. It's just preposterous. Okay, the market runs through these big name companies all the time, right? If it's not Nvidia, it was Apple, right? And then Apple started to falter. We know growth rates are not what they used to be years ago. And what happened to the market? It went up and up and up and up, right? And a new company, a new hot thing, took Apple's place as the biggest company in the world. And his name is Nvidia. So Nvidia, eventually, their numbers will start to slow substantially. The stock will stop going up in a meaningful way, right? Doesn't mean it'll stop going up at all, but the stock could go through a reset and then like slowly climb again. But the thing you got to understand about Nvidia after 2025 is a super exciting investment time is done in Nvidia after 2025. Like 2025 and before was the super exciting time to be an Nvidia investor. That was when it was just like, you know, they're doing this, they're doing that, they're increasing revenue so dramatically and whatnot. That does not mean Nvidia is done as a company after 2025. That does not mean Nvidia's stock price will never go up after 2025. Because at the end of the day, like Nvidia can keep increasing their business. But now what's happening with Nvidia is they're going to start in 2026 and beyond. The law of large numbers is going to start to catch up with them in a substantial way, like it catches up with everybody, like it caught up with Apple over time, right? It's really hard for Apple to increase their business dramatically now. Like you know, as you become bigger and bigger, it's just what happens. It's difficult, man. You know, you even look at AWS. AWS still posts very impressive revenue growth in the AWS segment of Amazon, but the business has become so big now, the numbers are so massive that people look at it and are like, you know, 19% or 16% or something like that. If AWS posts 16 or 19% growth, like that's still an impressive number, but it doesn't look that impressive versus much smaller companies that might be growing, you know, like Microsoft and some of their business that competes against AWS or Google. And they're like, oh man, those companies are growing at like 20-something% or 30%. AWS is a lot bigger business, okay? So, yeah. So anyways, that's just something important to keep in mind there.
Yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
Oh, interesting. No matter what the Fed does from here, I mean, does the rate picture matter for the bank stocks?
It does, because it provides the liquidity to sort of liquefy housing and corporate lending and bring spreads down. But I think the financial sector has produced visible earnings growth for a long time through these cycles, and they are trading like cyclical stocks. JP Morgan and Goldman should maybe have tech multiples, and so I think there's upside for financials.
But I mean, they're aside from when the broadening started to happen on the idea of rate cuts, those were the type of stocks already that were leading this market along with the mega caps. This is a large cap stock rally,
yes.
Right? I mean, industrials,
correct.
The biggest names out of the industrials, the biggest names out of the financials, the biggest names in tech were leading the way.
Yes.
You think that continues?
Yes, and because, at the end of the day, when you look at GDP, for every unit of economic activity, there's one unit of financial. So financials are half the economy, but they're not half the index. Now, I'm not saying they're going to get to half the index, but they really should re-rate. I mean, I think even this quarter, right, the numbers from JP Morgan, Goldman, and the financials, and look at the bullish IPO, these are all good signs to me that you want to be overweight financials.
Does the calendar matter for the market, right? September is historically a bad month. We like to look at the seasonals. Some people do to determine, what they want to do. Do you follow that much?
Yeah, I care about the seasonals because that we know becomes the base case for investors, just like August was a month everybody was wary. So then what you have to build in September is, are there things that can be positive surprises for markets? And to me, that's going to be the Fed.
A positive surprise?
Well,
a surprise at this point?
Okay, a positive versus the base case. Because if you look at all the Septembers in the past, this time is a Fed on hold that's finally cutting. So that makes this September better. And then the idea the ISMs could recover, which really doesn't usually happen in the fourth quarter, but it could finally happen. We've had 29 months of the ISM below 50. So I think that we could have a better than expected September, October, November, December, because of the Fed cutting and now the ISM turning.
Yeah, I mean, but not just ISM, right? We got to watch jobs.
Whoa, he's going, full September. He wins September, October, November, December, right? What's my feeling on that? Like, would I be shocked if we had a really good September? I wouldn't be surprised. If people are confident the Fed's going to cut, right, there could be that optimism in the market. If Nvidia does well, there could be that optimism in the market around the whole semiconductor space, which kind of helps just kind of give a little short-term relief out there, right? We already know earnings were good. We know guidance was pretty good from a lot of the companies that matter the most to the stock market. You could continue to see small cap momentum, especially if people become more confident that inflation is not an issue and the Fed's starting their next lowering cycle. With that being said, 2018 scenario is still out there. We could top first week of, right around the end of September, beginning of October, and still have a rough fall. There's always that factor, especially if you get a strong September. And I think that's just something people got to get mentally prepared for. Not as guaranteed to happen, but if it's a 2018 year, we'll have a rough fall. And it will come out of nowhere. No one will really expect it. Just when everybody's ready to go bullish and rate cuts, this is great. We're going up, baby, right? And it's dude, we've been going up. Where you been at for 3 years now? You're a little late to the game, but and you could have a big pullback in the fall. And then that opens up some opportunities for some, really good buys, obviously in the winter time. But we'll see. Maybe that doesn't happen. Maybe Tom Lee's just, bullish up in a way. It happens. But I feel like the market has been a little too not taking any risks seriously. And it just feels I always think about the market in terms of setting people up. And you had a good case to be made that the market should go lower, if anything, since April, because there's been a lot of still drama and a lot of negative things, a lot of negative sentiment surveys and all this stuff. But yet it's gone up and up and up, right? And then now I feel like you're going to have a strong case to be made that the market should go higher, right? Oh, Fed's cutting, interest rates going lower, boom. And then you actually get the Fed to cut. And then maybe after that, the market makes a short-term top. And then we actually have a several-month down cycle where it just kind of goes lower, and people think it's going to come back. And then it goes lower, and then it's going to come back. And then we don't bottom until January. That's a potential, just all things, when you can't make your investment decisions just based upon like this might happen or that might not happen. You got to consistently buy in the market, and if you want to hold a little cash, take some profits in September, fair play, right? That's fair play. So
again, and we have to look at the inflation prints again.
That's right. Yeah, and that's where we have to rely on the Fed to make good decisions, and Fed independence being critical, because we want the Fed to do what's right for the economy.
Some say Fed independence is already shot. And today, or last night's news of the president moving to fire the governor, Lisa Cook, is the nail in the coffin of that conversation, at least for now.
I hope that's not the case, in the sense that...
Not the case of what? That he actually fires her? Or that it's the official end of Fed independence?
Both, actually, Scott, because I think that there's a window for this to have a dignified ending or outcome for Cook, and I don't know if that means people take a step back and reverse what they've done, or if that means Cook is allowed to resign. I think it is important for that to be a process the market accepts, because you're right. I think the market would get very nervous about Fed independence being questioned.
Okay, on that note, let's bring in Steve Leisman. He joins us on the phone. Steve, we have a statement.
Yeah, there's one other part, because they just kind of talk about the Fed here, but there's one other part I want you guys to hear. Tom Lee makes a big statement toward the end here. Very big statement that I think is worth hearing. And this is in regards to Nvidia and what he expects Nvidia's stock price to do.
Revenues back into the fundamental story for Nvidia.
On their earnings, he makes a
Tom,
big
you want to just put a
statement
bow on that, reacting to that?
Ready?
Yeah, I might say that investors have been now patterned and bracing for Nvidia to sell off after they report tomorrow. And yet, I think the visibility and I think the conviction on AI is actually stronger. So I think there's a chance Nvidia rises dramatically after they report Wednesday after close.
Okay, that's a bold statement.
Dramatically after they report. He thinks Nvidia is going to go up dramatically. That's a big statement, Tom Lee, right? I don't think it would be the worst thing, if Jensen came out and said, we're still going to grow revenue substantially in 26. We could grow it. He could give it just a big range. He could say we're going to grow revenues anywhere between probably 30 and 50% in 2026 based upon how our order flow is looking. Like, if Nvidia really has this big of a backlog, if they're really working with customers this close, that's not crazy to make that assumption, when you're basically going to be, it's almost September now at this point in time. Like, they should be able to see their chip orders 6-12 months easily into the future, if not longer than that, right, from their customers. So if they really feel confident in their business, throw out a number there tomorrow. Say, you know what? I mean, next year's looking great. I wouldn't be surprised. Don't hold us to this. This isn't an official guide, but I wouldn't be surprised if we grow revenue 30 to 50% next year. That would be so much, because I think analysts are at 38% for next year, right? It would just give so much confidence to just hear Jensen come out and say, next year, it's not going to be as great a growth rates as it's been, but still a ridiculously huge number. Oh my gosh, that would give so much confidence. He could even do another range, like somewhere between 25 and 40%, or 25 and 45%. Oh my gosh. Could you see Nvidia go 200 if that happened? I wouldn't be surprised. Because it would just take such a weight off of Nvidia shareholders, because then they know what they're getting next year. They're like, oh, we're getting somewhere between 25 and 45% revenue growth, right? And I feel comfortable with that. And we'll probably come in to the midpoint or the high end of that. And they're like, boom. And like I said, Nvidia should have the sort of clarity that they can make a comment like that, right? And he could say, you could easily say, this is not our official guidance yet. We'll come out with our official guide, but just based upon what I'm seeing with order patterns, what we have already coming in the books, kind of projecting out a little bit, this is what I think we'll probably. Come on, man. You know what I mean? Like in Nvidia 200 then, if that were to happen. Because it would just, once again, it's not because it'd be such a great surprise, because a lot of people expect Nvidia to grow somewhere in there next year. It would just be like Jensen coming out with that level of confidence, driving 1,000,000 miles an hour. I'm going to put a speed bump in front of my house.